In the recent interview, Cathie would say, I have never seen the opportunities I see now, according to expectations, truly disruptive innovation, which right now is valued in the global public equity markets at roughly $10 trillion, roughly 10% of the global equity market cap. We believe that 10 trillion is going to scale to 210 trillion by the year 2030. CEO and CIO Arcanist Cathie would give her monthly hour long in the know. Cathie started off by admitting that it's been a very challenging month for everyone, and ARC has not been immune to the worldwide financial crisis that's occurring. ARC Innovation Fund dropped nearly 9%, which is its fourth worst performance in its history, stretching back to 2014. The three greater declines all came during March of 2020 as the first economic restrictions in the US during the coronavirus pandemic were ruled out, despite the Cathie confirmed that the inflows for ARK Invest are positive. Bloomberg.com reported that influx of 366.7 million came into the fund this week. Cathie updated her audience on what's happening in the markets, especially taking a look at economic indicators and market signals. But before listen to Cathie, make sure to like and subscribe as it greatly helps us put out more daily content for you. Monetary publicity. The Fed raised interest rates 50 basic points this week, and I have been saying that I thought that will be a mistake. The markets are collaborating. That it seems the Fed is making a mistake. So we have seen the stock market now go through a spasm, and the S&P now from its peak is down 50%. The Nasdaq from its peak is down 25%. Pure play innovation strategies like ours are down 60 to 75%. So that's not just a spasm. That's conclusion. I think that innovation companies that are not in benchmarks are witnessing the end of the world. It will be further from the truth. This is a huge inefficiency in the market. This tendency to move towards benchmarks and risk of environments. It's ridiculous that the generic resolution in blockchain technology and crypto assets are all behaving exactly alike. In fact, crypto assets began to correlate highly with the Nasdaq starting at the beginning of COVID. Before that, there are no correlation at all. And so we think this is an anomaly, a massive anomaly, and that with time it is correct. The efficiency will be introduced back into market. So that's the stock market, the bond market this year. To date, if you use the 10-year treasury year and its proxy period to 1940, year to date to April, I am sure even more. So through the bond market has not seen worse performance since 1788. Think about that. This is like a tsunami and an earthquake together. I used to describe that was going on in the bond market as an earthquake. Given the very low base of interest which we started now, you might be asking why would that be true given that the bond market was just a terrible place to invest in the 70s when inflation was taking off. Well, the difference between now and then wasn't back when there were huge coupons. Interest rates they were paying were starting at 6, 7, 8, 9%. Whereas during COVID, we got down to 0.5%. So the base from which we are starting is very low. And that's why we now in a tsunami. And as mentioned, a crypto and Nuance class should not look like the Nasdaq. And this is highly correlated right now. You are in a bear market and when we close to the end when everything starts acting alike and using the capitulation of one market after the other. I think the Fed's going to get the message. To watch the full video, check out the link in the description. What do you think of Cathie's thoughts here? Leave a comment. Don't forget to subscribe and see you in the next video.